So the Dow Jones Industrial Average relatively unchanged during Tuesday's trading session. We did see a mild push to the downside. It did register a temporary 3-week low. However, once again, the dip buyers showed back up and it did produce another long lower wick on the Dow Jones Industrial Average. Pay attention to this particular candlestick. This is very similar or very close to a hammer at support. You can see all of this support building on the Dow Jones Industrial Average coming in here at about 23,300. This doesn't mean that this sideways move, or what has been a sideways move, cannot break to the downside, but what it is showing us at this particular point, that this level here that I've already referenced is still holding as spectacular support. Now, we've been expecting this slowdown to take place in the markets for a number of weeks. We are seeing this, and it is best described, or at least best surmised, by this ADX, which continues to reset. It has been trying to temporarily turn back up, but I do suspect that over the next couple of trading sessions, we are going to see this continue to move back down below or towards that resting 20 line on the Dow Jones Industrial Average. What you should be paying attention to right now, because we are resting and also testing it, is that rising 20 exponential moving average. We pushed down temporarily below this level on Tuesday. However, we held back above it. Again, if we do close, and if we see a flinch below the low, the intra-session low of today's session, it wouldn't come as a surprise to see the industrial average move down to about 23,000. But at the current juncture, we're still holding up relatively well as we see these oscillators also reset. So if you pay attention to my screen right now, you can see the MACD is still giving us a definitive bearish signal. We're still seeing momentum flow to the downside. The RSI is resetting and it is resting above that positive 50 line, which is what we like to see when we see these markets, when we see transitions take place and the natural ebbs and flows of bullish trends, and when we see temporary slowdowns, which is what we're currently registering at the moment on the Dow. But again, this is all very healthy sort of construction of price action. And at this particular moment, as at the close on Tuesday, we have nothing to be concerned about in terms of an intermediate reversal, nor that of a major top taking place on the markets. I'll keep you updated as the analysis or as the individual candlesticks continue to unfold before our eyes. But again, you can see on the S&P 500 a very similar type of candle showing up on Tuesday. You can see this hammer at support. The reason I'm calling this support is because you can see another couple of lower wicks taking place right at this same level. So support is holding, albeit temporarily. We can break on down below it. If we do see this, you have to pay attention to these 2 wicks over here. And this is also going to coincide with this rising 50 exponential moving average. So if you mark where we're currently registering, 2,544, it is very close to where these lower wicks are. So what I'm suggesting right now is, look, we're still in a healthy short-term slowdown. We're in a short-term healthy consolidation. But if we are to see these markets definitively pierce below these levels, a very nice support area to pay attention to, which is going to help reset the natural overbought readings that we're seeing across the board on those oscillators and also on that ADX as it continues to reset, is down here at the 50 rising EMA, which is registering at 2,544. So do not be concerned, or do not be surprised if you do see this. Now, we still have some pretty nice sort of bullish continuation triggers at this particular moment. I'm not suggesting that these are going to be hit come Wednesday or even come Thursday or Friday as we draw out this particular week of trading, but it is good to have this in your back pocket, so to speak, in case these markets do see a bounce off from these current levels that we're sort of interacting with in terms of those rising EMAs. And if we do see a sudden sort of push or momentum to the upside, there's always a possibility for that. But really right now for me, and as I look at these markets, I'm not really expecting this, one, until that ADX does reset down to the resting 20 level, and two, until we see at least the RSI come back down to 50 and let these oscillators, more importantly the stochastics, recalibrate and move back towards a more neutral setting. At the moment, you can still see we are exceptionally overbought on the Nasdaq. We're registering at 90 still, so I mean they haven't really budged whatsoever, and we're only seeing the infants of this MACD cross to the downside. So it looks as though we are still going to have to persist through a largely sideways moving market. Now, in terms of individual stocks, we have seen a lot of volatility flow through into some, most noticeably yesterday. On Amazon, we set up a very high upper wick on this particular candlestick. Again, this is sort of, suggesting some sideways consolidation. Overall, this pattern is still very healthy. We've identified this particular continuation pattern a number of weeks ago, And outside of the upper wick that we saw develop on Monday's day's worth of trading, we still have a very nice sort of stair-step consolidation underway for Amazon. This is all taking place as we wait for these rising exponential moving averages once again to come back up and begin interacting with price. Now, as I segue into the second stock, this is Apple. You can see the pullback which took place during today's session. We were down $2.46, but we are now resting for the first time on that 10 exponential moving average. We are also very close to the open gap support. So if we were to see a pullback, this is the beginning of where we would suspect, again, support to show up. It doesn't mean that this is it in terms of the pullback. But having said this, I'm really liking the Apple construction. We're still seeing volume trickle out of Apple as we see the pullback. And it looks as though also we may be developing that of a bull flag. So pay attention to the interaction which is going on with price action, with those rising exponential moving averages, not only on those two particular individual stocks, but also on the broader market indices as well. Boeing Airlines still largely moving sideways, nothing happening there. Baidu's coming back down to retest that 233 pivot that I was speaking about over the weekend. Caterpillar still continues to move sideways. This is really nice. Pay attention to those Bollinger Bands. I do suspect that they are going to begin squeezing over the coming days. COP is pulling back. This is fine too. As long as we hold above these levels, this is going to be a short-term pullback, and the uptrend will continue as long as we hold and we register that next higher low above this little swing low over here, coming in just shy of $49 per share on COP. I'd hold on to that long term if you are positioned in that individual trade. CVX is still trying to back test this red rectangular box, the open window, which is still yet to close. It got very close to it last week, but again, we are still largely moving sideways. Google saw some massive intraday volatility yesterday. I was very surprised by this. We did essentially close the open window. We overshot it. A very high wave doji, okay? A high wave spinning top here. But again, today, I like today's session. This is more so mimicking that of the broader indices. It is another sort of a hammer at support. So as I bring up the right template, as I look at my keyboard or look down upon my keyboard and push the right key, you can see that we are once again seeing very quick back tests of these rising exponential moving averages. And what's really good about this is now that we have definitively, even though it has been on an intraday basis, we have filled this gap. So pay attention to Google. This is another stock which is under construction, much like Apple, much like Amazon. They are very close and or very, very much so correlated very closely to one another. They're not perfect, but they do move generally in congruency with one another. So pay attention to that. When you start to see some of these stocks break out, it's probably lit the fuse, so to speak, until we see the other two confirm at some later point. Goldman Sachs is still moving sideways as well. IBM has got the first bullish candlestick. So we spoke about this over the weekend. It's not enough to suggest that we are going to see immediate follow through to the upside. But what is good to see is that we've pulled back into this green rectangular box and we're already developing that first white candle. So I like the construction underway on IBM. It's not ready yet, but it's coming, and that's what I'm excited about. Netflix also starting to see a bounce off from this back test of support. It happened immediately on Monday. Tuesday, we're trying to see another follow through, even with a relatively weak market. But again, it's still a long way away from a bullish trigger, and it needs a little bit more time for these oscillators to reset. They have done so more or less on the Stokes and also the RSI, but wait for that MACD to flip to the positive side and to really sort of, build support at this level. We're starting to see it, but it's a little bit too early to be jumping into Netflix. And to conclude with right now, we've got Tesla, which we've been waiting for a long time. I've been speaking about this. This is going to be the back test of potentially 320 all the way up to 340. And if we start to see potentially bearish reversal signals, I know today's candlestick is an inside day candle. It's not the most or the strongest of bearish reversal signals. I'm still expecting price action to slowly grind higher and higher and higher. But when we come back up into these higher levels, and if we do see the construction of some bearish candlesticks, this is going to present us with potentially one of the nicest trades to conclude the calendar year of 2017. And I've got my eyes very closely focused on this. So I wish you all a very nice Tuesday evening. I'll be back with you later in the week for some more market updates. Until then, it's James signing off on behalf of Pivot Point Trading. Goodbye.